Where will America's 400 largest housing markets go in 2023? Nationwide, home prices rose 124 months in a row, from February 2012 to June 2022. But now the situation is reversed. By September, the Case-Shiller National Home Price Index, seasonally adjusted, had 3 consecutive months of declines. While deflation in the U.S. housing market has been pretty clear, real estate insiders are divided on home price adjustments. How will they unfold in 2023? Reason? Supply and demand? In terms of housing demand, there is still a decline with mortgage applications, down 38% compared to 2021. It is now below the low point during the housing crisis of the 2000s. In terms of housing supply, it is still quite scarce nationwide. While the spike in mortgage rates corresponded to a massive drop in demand, that didn't cause sellers to rush out. In fact, listings on Realtor.com are down 17.25% year-over-year in 2021. Many buyers have postponed their home conversions because they don't want to give up their low fixed mortgage rates. Percent or 3% that they are enjoying for their current home. One of the best indications of market movement is to look at inventories in the 400 largest U.S. markets and how fast they are changing. Shortly after mortgage rates spiked this spring, America's overheated housing market cooled down. This has facilitated an increase in inventory. According to Realtor.com, the national inventory level increased by 46.8% compared to 2021. Cities like Austin and Phoenix have seen their respective inventory levels soar by 160.7% and 176%. Meanwhile, markets like Chicago and New York City were essentially unchanged. A sudden spike in inventories often marks a housing market that has moved into a full-blown correction. In the 2 cities of Austin, Texas and Phoenix, Arizona, where house prices have fallen 10.4% and 8.1% from their peaks in 2022, respectively. Looking ahead to 2023, research firm John Burns Real Estate Consulting predicts inventories will increase further next spring. In terms of nationwide home prices, the research firm expects a drop of 20 to 22%, if affordability remains hampered by 6% mortgage rates in 2023. Of America's 400 largest housing markets, 36 have returned to pre-pandemic housing inventory levels. And 364 markets have increased home inventory levels, but the rate is still lower than before the pandemic. Morgan Stanley researchers argue that a tight inventory doesn't stop the decline in home prices. Scarce inventory levels only staved off the 2008 housing market crash and prevented a huge drop in home prices.